Welcome back, everyone. Next, we have AGBA Group Holding Limited. It trades on the NASDAQ under the symbol AGBA and is a leading one-stop financial supermarket based in Hong Kong, offering the broadest set of financial services and healthcare products in the Hong Kong area through a tech-led ecosystem, enabling clients to unlock the choices that best suit their needs. Please welcome its CEO, Wing-Fai. Nice to see you again. How you doing?
Thank you. Well, your 30-second introduction summarized everything we do here in Hong Kong. Thank you very much. I could not say it better myself.
I bet you can. Why don't you try it? And then we'll take some questions when you're done. Okay.
Okay. Good morning, everyone. Thank you very much for your time this morning. I think for today, and I presume quite a number of you probably have a good idea what we do. So I'm going to spend about 5-10 minutes of your time this morning, try to dive into what we really focus out in Hong Kong here, out in Singapore, for the calendar year 2024. Okay, what are our objectives? What are our focus? So just a reminder, as it was just introduced, we are the largest one-stop financial supermarket in Hong Kong. We sell everything from life insurance product, asset management product, property and casualty insurance, all the way to international property. And we have been doing this for over 30 years. We are not a startup. I know it's very misleading when you look at our share price and our market capitalizations. I've been half-jokingly explaining to people we are a very large company with a tiny market cap, and for no good reasons, okay? And we are number one by far. We have a very unique franchise that we can spend a lot of time talking about our franchise strength. And we have about 500,000 customers in these regions, okay? And, you know, again, we're led by a fantastic team in Hong Kong that have been doing this for a very long time, and we're very proud of it. So on one hand, we have the largest ILA business in Hong Kong. That's everything under the sun in financial services for retail customers. On the other hand of our business, we also have one of the largest healthcare franchise in the regions. For this year 2024, we have what we call 3 Ps. Okay, we have 3 aspects of our business we really want to focus in. That is our strategy. Number 1 is prospect. We face a lot of prospects. We faced a lot of headwind last year in year 2023, macroeconomic-wise, geopolitical-wise, okay? We see much better environment this year. We see a lot of prospect coming out just in the first 2 months of the year. That's number 1. Number 2, we like our market positions. We have very strong market positions. We are looking to how we're going to maximize revenue, how we're going to maximize growth from our wonderful market positions, now in Hong Kong, in Greater Bay Area, China, soon in Singapore. And number 3, I want to talk about our share price. Okay, it's very important for us. It's very dear for us because many of us own a lot of shares in our company. You own shares in our company. Share price means a lot to us, and we're very focused on it. We don't like our share price. We're working very hard to fix that. So let's dive into what we meant by these 3 Ps. Number 1, this year, without a doubt, the macroeconomic environment is much superior, have much higher degree of clarity than what we saw this time in year 2023, okay? And there's a lot of structural changes that is coming. We can see that. We operate that. We have a front row seat looking into a macroeconomic growth, macroeconomic changes in the economy here. And number 2, AGBA is extremely well positioned for growth. We talk about that in a few minutes, okay? And our entire organization, our entire team, is geared for that. And number 3, given where our share price is, we have substantial share value to be unlocked. Let's talk about the first one, the prospect, okay? Again, as I said, so far already, just 2 months past. We have a whole month in February, in Chinese New Year. This is already a much superior operating environment than this time last year. Without us, we expect still a lot of headwind. The growth is still rather choppy at the moment, but I think we see a lot more visibility ahead of us in this year. And that's number one. Number two, we see a lot of exciting structural factor still driving a lot of growth, a lot of customer buying insurance, buying asset management product. Regardless what the geopolitical environment is, regardless what the macroeconomic environment is, China and Hong Kong remain the single largest saving market in the world. Hong Kong and China represent almost 40% of global saving, okay? And the number is actually going up, not down. Actually, it's very well covered by a very good article in Economist magazine a few weeks ago. And number three, and we're already seeing some very powerful policy changes imposed from China, imposed from Hong Kong government that allow more business opportunity coming our way. And we are a big beneficiary of it, so we're very happy. And number two part is our positions. What are we talking about? As we mentioned earlier on, we are the largest one-stop shopping, financial shopping mall. What does that mean? Our business is essentially organized into four elements. Number one is the distributions, okay? It's what we call the AGBA Financial. We have the largest ILA team in Hong Kong. We have over 1,200 people that walk the street, knock on the door, see retail customers every single day. We are proud of that. And that has been a business that we have operated in the regions for over 30 years. And number two is a platform business. It's our engine, it's our infrastructure, it's where all our technology resides. Since the year 2018, we have spent about $200 million US building that platform, building that technology, building that infrastructure, building that training program. That is a very viable business for us. We are just barely scratching the surface at this moment, what we can do with that business. We're going to be rather busy in year 2024 in maximizing revenue in our one platform business. And number three, we have a very successful fintech investment business. Okay, why do we invest in fintech? Because we don't have monopoly wisdom. We like to learn from the best of class around the world. From some of the investment we make in fintech company around the world, we learn a lot and we export or import that learning into everything we do in Hong Kong here. And number four, we talk about that, and we don't spend much time talking about it, or we don't spend enough time talking about is our healthcare business, which is one of the leading brands in Hong Kong. That gives us a lot of more flexibility in serving our customers both in Hong Kong and in mainland China. And it also gives us a very big captive customer base. And let me give one example of our franchise strength, okay? Around this time last year, we decided to team up with HSBC Life. And we very blessed. We're the first outside company, outside HSBC Group. We're allowed to sell life, HSBC Life insurance product. And we start doing that about middle of the year. And very quickly, we ourselves became one of the largest channels HSBC Life has in the entire systems in Hong Kong. We're well proud of that. We continue that momentum this year forward. Okay, that successful partnership we have had with HSBC Life exemplify what we do and our franchise strength, especially in distributions. And we're going to carry what we learned last year with our successful partnership with HSBC into a number of other partnerships we have had, both in life insurance sector as well as in fund management business. You're going to see more of this type of partnership quite aggressively introduced in year 2024. We have had quite a number of very interesting conversations with a number of operators in Hong Kong, especially US operator in Hong Kong. There should be some very significant strategic move we'll be making in the course of year 2024. So I expect our sales team, our franchise will continue to grow, not just organically, but also through merger and acquisition. There are a number of very significant opportunities we are working on at this moment. And another thing that's very important for us is continue to look for growth by foreign customers. Many of our customers are going beyond Hong Kong, going beyond China now. Singapore is naturally, it's only 3 hours flight from here. And it's naturally one of the easiest places, one of the most popular places they land beyond Hong Kong. So I'm glad last year we decided and agreed to acquire Sony Life Insurance operations in Singapore. And we are in the tail end of getting regulatory approval to taking control of that operations. We expect a lot of growth from that, from the existing customer they have, as well as existing customer we have, and what we can also get customers in Singapore as well as in Southeast Asia. There's no company look like us in the regions. So our business model and our infrastructure, our tech, our training capability is very viable. We're going to leverage our existing infrastructure in Singapore very aggressively in year 2024 to capture growth. And that help maintain and further extend our leadership, okay? And when we are approved to operate in Singapore, we are the only ILA in the regions that operate across Asia, okay? And we do that because we know what we do. We have a very strong existing infrastructure we can leverage on with foreign our customers. We have no interest of we are not a foreign services. We are not ambassador, okay? We only do that because we can make money, because how we do that, we follow our customers, existing customer and new customers. And the third one I want to talk about today, and that we focus on this year, is our share price. For some of you may know, about a month ago, we announced that we did a capital raising exercise of about just over $5 million US. Okay, we're very proud of that. We are especially proud that we did that capital raising exercise at about 60% premium of the market price at the time. Okay, and it's about 70 cents per share. We're still trading below that, and we agreed to do that. Myself is one of the largest contributor of fund in that capital raising. We're proud of that. I'm very proud of doing that. The reasons why we do it in a premium rather than discount to market is because we really believe our franchise value, number one. And number two, we strongly believe our share price is mispriced at this moment for a number of reasons. Okay, it's no fault of anyone. It's just the way it is for the market from time to time. We want to lead the way. We don't show the market, show everyone. We have strong confidence in our company. We're going to charge ahead. We're going to put money where our mouth is, okay? And there's a lot of people out there worry about, we became a penny stock last year, okay? Would we be delisted out of the stock exchange as soon? I'm happy to say, having worked with our lawyer, I think our delisting risk is extremely low. And we have a very good operations, and we have a great franchise. We are not a startup. We are a very large company, have operated for 30 years. We have strong revenue. We have strong revenue growth. So apart from our share price, which to all of us is largely technical, we are qualified. So we're going to work with regulator to make sure they understand that. So far, they seem to be very receptive of it. So we believe the delisting risk for us away from a stock exchange is extremely low. I'm very happy to report that. So again, we're happy we did the capital raising. We're very selective about it, that we got a lot of proposal over time for fundraising. We didn't pick those because most of those transactions proposed to us were discount to market. We want a premium to market because our franchise is worth it. Well, that's so. This page show you. Okay, I won't go into detail. You can find this page on our website. Okay, as you can see, it doesn't matter how you measure it. And our comparable company trade about 5 times revenue. Currently, we trade in about 50% of our revenue. We trade 0.5 times of our revenue. So it goes without saying, we think our valuations is extremely low. So it doesn't matter how you gauge it, how you measure it, okay? And we are about $300 million undervalued at this moment, okay? We value about 30, 40 million US dollars. We laugh about it quite often, okay? And it's a painful laugh, okay? And while we should be trading at least $300 million US instead. Why? Well, we are a company that's very conscious of our own effort. We're conscious of our own strength and weaknesses. And we strongly believe almost all of the reasons, all the real reasons of the way we are trading in our share price trading at are technical. Number one, we did have a really strange problem at the time when we did SPAC in November year 2022. That's one of the worst market environment. Even before we were listed, the SPAC valuation dropped to $5 from $10 within a matter of days. Okay, it really spooked us. We didn't have a choice. We went ahead with the merger and we went listed. But 50% value were lost within a couple of days before we went public. That was pretty extreme. And number two, we had very limited free float. Okay, and the free float is slightly better now, still not good. Okay, that is probably one of the reasons why and you have strain in share price and affect our share price movement as well. And number three, and until summer last year, or actually September last year, we have rather limited exposure to investors around the world. Okay, with the help of our very, very fantastic IR team as well as external advisors, we have spent a lot of time talking to thousands of investors around the world, online as well as person to persons. We are beginning to fix that. We're going to spend a lot of time, a lot of effort in doing that. And number four, I don't like to point finger. Okay, I don't like to point finger as well at all. But we do believe we are victim of some abnormal trading behavior all the way, almost all the whole year last year in year 2023 until almost Christmas. Okay, we trade much more. Our trading pattern is much more normal now than it ever been. So we are happy where we are. So again, we believe our share price are mostly driven by technical reasons, and we are working very hard to fix that. How we fix that? Number one, we believe in education. We believe reaching out to investors on a daily basis, and we operate a transparent company. We believe corporate governance is extremely important. So we go out and educate, tell people our story on a daily basis, number two. And we engage our investors on a daily basis. And number three, whatever we do, anything that's pop up, we went out and disclose immediately. And if you like, you please go to the website, or our website is www.agba.com/IR. We have a lot of good material about our company in there. Well, thank you. Well, that's all I have to say today. Again, out this year, we're going to focus on three things. Number one, capture the prospect. This is a much better year than last year. And number two, continue to strengthen our market positions. Okay, continue to leverage on our market position. Number three, we're going to deal with our very low share price head on this year. So prospect, position, and price. Thank you. I can answer any questions you may have.
Great job, Wing. We do have some questions for you. You mentioned it, you addressed it, but let's go a little bit deeper. How does the company aim to address the valuation gap in share price? And given the current share price performance, is there delisting risks?
Yeah, number one, the delisting risk, I mentioned that earlier on. Given the way our companies operate, we are not a startup. We have been operating over 30 years. We have a fantastic growth this year and last year. And we are a genuine revenue-making, strong company. And our share price, we do believe, is a result of a number of external factors that has nothing got to do with the franchise strength, with the hard work of our people. And we have explained that to the regulator in US, okay? And so far, we have been given very positive response. And so I do not believe we face any risk of being delisted from the stock exchange anytime soon.
Okay, great. Talk a little bit about your plans from 2024 to 2025 and onwards. Can you hint to us on your expansion plans?
Well, our extension plan is one of that leverage what we have built. Okay, we have built a fantastic franchise in Hong Kong, and that business model works. We want to take that business model and implement it elsewhere for more growth, be it in across China, be it in Singapore or Malaysia. We want to stick with what we know, okay? And you're not going to see us arrive in New York and start selling our product, our services to American. But what you do and should expect us to do is take our business model, take our franchise, take our product to serve customer in what I call the Chinese-speaking world around the world. So where they are, Singapore is a good place. Malaysia is a good place, okay? Toronto in Canada is a big market for us as well, for instance. There's a big China population over there, okay? So we follow our customers, okay? You should expect we're going to be much more aggressive this year when it comes to acquisitions.
And we have a few follow-up questions regarding geography. Greg Aguilar asks, how wide geographically are your customers? You mentioned it, but please mention it again, which countries you serve and what products in each country. Are they all the same?
Yeah, number one, our biggest market is here, is Hong Kong, is southern part of China. That's one of the largest market for saving in the world, without a doubt, okay? Within an hour and a half, we access to one of the largest populations in saving in the world. That's number one. Number two, as I mentioned, many of our customers are now beginning to extend beyond these regions. Singapore is the very first natural landing place they have, which is why we agreed to acquire Sony Life Insurance company last year, and we are at the tail end obtaining approval to operate there. So we are following our customers. So Singapore is our next stop. I hope and expect beyond that and other big destinations of our customers, existing customer and other source of new customers is Toronto in Canada. Okay, that's another big saving hub for our Chinese customers. So you should expect us be in Canada in year 2024.
And Everett Perry wants to know what percentage of your business is in mainland China?
It's very hard to gauge, okay? And the line between Hong Kong and China is getting more disappearing at this moment. So I would say about half of customers in Hong Kong are mainland Chinese customers coming to Hong Kong to buy our product. And we have a very large team that tailor for them, okay? So it's very hard to get. I think in general in Hong Kong, about 1/3 to 40% of life insurance sales are to mainland Chinese customers. Ours is about that or a little higher than that. So we're about 40-50% of the whole pot.
And Diana Romero asks, what is your strategy to grow great salespeople? And how does the most of your business come in? Is it through your sales team or online advertising?
We do everything. Okay, we do absolutely everything. It really depends on the time of the year. We do a lot online. We do a lot of social. Okay, China is very social sensitive. Okay, so we do a lot of social marketing in China. But by and large, we still think the person-to-person sales methodology is the most effective. Okay, so which is why we build a very large team here, and we're going to continue to build team in Greater Bay Area. And in the questions of how do we get great salespeople is a very good one. It's one that we fine-tune on an ongoing basis. It's training. It's in training. Since 2018, we have built a fantastic training team in-house, and that has just been incredibly productive.
And Wade Lewis asks, how are you adopting artificial intelligence into your business?
Oh, well, guys, remember I said earlier on we spent about $200 million in our one platform business? Okay. About half of that money is spent on technology. Okay. Actually, over half of that is spent on technology. And we have what we call product comparisons. Okay. And what that is we are the only company that can compare all of the life insurance product in Hong Kong, all of the fund management product in Hong Kong on the screen. Okay. Not only today, we can backtrack it, we can look forward. We have, this is one of our secret sauce, one of our secret weapon. We have spent over 3 years building up, probably a little more than that, since year 2017. Okay. And it's some of our secret weapon. That's how we enable our sales to be incredibly productive and effective.
And John Richards asks, when can he expect final agreement disclosures on management's recent term sheet agreement to purchase shares of 70 cents per share?
Oh, it's done. It's all done. I mean, then it's close. We're just dependent on share registrations. Okay, those are just documentations. Okay, money is already in the company, and for all intent purpose, I mean, I am the biggest contributor of that. This money left my pocket, left my bank account over a month ago. Okay, so it's a matter of going through share registrations. I think there's a whole bunch of things we need to file to get. I haven't got my hands in the shares yet, but the company has already got my money, so I'm waiting for they print the share certificate for me.
And Shannon Lambert, first of all, thanks you for making this presentation. And she asks, when do you expect your year-end numbers to be released? You alluded to this earlier, but revenue is up 10% over the same periods. How do you get this to 30%?
Let me take 2 steps back. Okay, first of all, let me answer the first question first. And we're going to announce our results by the end of the month, very quickly. Year 2023 was an unexpectedly bad year, okay? And we thought Hong Kong had a bad year 2019 because of social unrest, and then 3 years of very severe COVID lockdown. And we were expecting, like the rest of the world, there will be a hockey stick rebound of our economy in Hong Kong as well in China in year 2023. That didn't happen. And we realized as early as March, that ain't gonna happen, okay? So as you can see, not only China did not have growth, actually China went into a deflation cycle. They're trying to dig themselves out now, okay? I do think we are at the end of the deflation cycle in China, okay? I think we're coming out of it. Just looking around, you know, in Hong Kong general street traffic, just looking at overall business, we're beginning to see a pickup, especially since the middle of January. So how do we get from 10%, 20% to 30%? Or I think we should grow about 50% this year. It's really just making sure we have the best sales team. And number one. Number two, make sure we have some of the most innovative marketing idea. And number three, just make sure we have the best product. Again, we have a very strong franchise, okay? And one of your colleagues asked earlier on about AI. No one have what we have. We have AI in product comparisons. You come to us, we'll be able to tell you and help you compare product from all of the life insurance company, all of the fund management company. No one else in Hong Kong can do that for you. So we have a superior competitive advantage against everyone else.
And I'll leave you with this for some closing remarks. Gretchen Wagner wants to know, what has your growth rate been over the past 24 months, and what do you expect it to be over the next 24 months?
Yeah, well, again, as I mentioned earlier on, 2023 was a massive disappointment. No one expect China going to deflation, so I would write that year off, okay? I would write 2023 off. I would benchmark not from growth perspective because that's too easy. It's easy for me to say. We, however, have a revenue benchmark. Okay, I see no reasons. Okay, in year 2024, we're going to try to reach 150 or 120 million dollars revenue this year. Why? We make twice that before COVID. We make $200 million in year 2018. Okay, so I like to go back to where we were before COVID. Okay, the whole economy haven't gone back to it yet. We're gearing ourselves to go back to it. Okay, so rather than give you a number of growth, I would rather go look back and say, what did we do before social unrest, before COVID? We did 180, we even do $200 million. So let's be conservative. I see no reason why we can't do 150.
All right. Well, that's a great way to end. We all think it's possible. Thank you so much. We are done. We have a few more questions, but we'll send them to you so you can answer on your own because we got to move on to our next presenter. But thank you, Wing. We hope to see you again in the future.
Take care.
All right. Stay with us, everyone. We'll be right back with Canoe Technologies.